Welcome back. You're watching Market Fatafat on ET now, and let's get started with all the stocks that have been buzzing in trade on the back of news flows and on the back of technicals. On the technicals, we do have Ruchit Jain joining in with us, while from the research team, we have Junaid joining in with us. Very good afternoon to both of you all. And Ruchit, the first stock that you've picked out for us is Tech Mahindra. What is the word on this one? Last 6 months, a good up move, 21% is what we have seen. Is this story going to be continuing for TechM on the charts?
Yeah, hi, very good afternoon to all of you. Well, certainly, I think the entire IT space, what we can see today, has resumed its broader positive momentum. We did see some corrective phase recently, but again, the Nifty IT index could support around its 40-day exponential moving average, and similarly, Tech Mahindra too has taken support around that 40 EMA when we witnessed the dip during the results. But the stock has breached its recent swing high, which indicates a continuation of the high top, high bottom structure. And such high top, high bottom structure could lead to further up moves in the stock towards 16 and 50, 1660 in the near term. So overall structure looks positive along with the entire IT basket. I think this is one stock which in the short term can see some good momentum.
Alright, so that's the view coming in on Tech Mahindra. Let's talk about Hindustan Zinc on the fundamentals now, and one of the big losers in today's trade is Hindustan Zinc, as of now also 8% lower, and this is following the announcement by its promoter Vedanta that they will be selling a larger portion of their stake through an offer for sale than they had initially planned. Now the offer for sale, which opened for subscription today for non-retail participants, and this will be concluding on 19th August, it comes with a price of 486 rupees per share, representing a 15% discount to Hindustan Zinc's closing price on Wednesday. And initially, Vedanta had intended to sell 11 crore shares that made up 2.6% of the total equity that they held in the company. However, the company has now increased this to 13.3 crore shares, which is equivalent to 3.17% of the total equity. The OFS will conclude a base offer of 1.2% with an option to sell an additional 1.95% if demand exceeds expectations. Now, the second factor in play over here is the board of Hindustan Zinc will be considering a second interim dividend on 20th August, and they're also planning special dividend payment of 8,000 crore to shareholders. This is the word they're getting from the street. So, well, lots of reasons, but primarily this is the reason why the stock is tanking in trade today.
Okay, let's move on and shift focus to a name coming in from the auto sector, Tata Motors. Ruchit, that's the one you picked out for us. Yes, yesterday we did see a lot of launches that came in from Ola and Mahindra, but you picked out Tata Motors. What's interesting here?
So the stock price says something else, apart from the competition, which has launched certain products. But I think Tata Motors, definitely the broader trend still remains quite positive, and today the stock has surpassed its last 1 week's consolidation high, which was around 1080. So I think this is a sign of a possible continuation of the uptrend, and we can see the stock heading towards 1130, 1140, which would fill up the recent gap area. So the momentum looks positive amongst the in some of the auto names. Tata Motors certainly is one of those where we can see a relative outperformance.
Surely. Good to see a relative outperformance for Tata Motors. Let's move on, talk about the next stock and focus on the back of its earnings. KNR Constructions, that's a stock I'm talking about. When you're looking at it in terms of numbers, revenue is quite flattish, not much of an excitement there. Just a 0.4% uptick on a year-on-year basis. In the morning, we'd seen a spike up coming in the stock. If you look at it, it opened up near the day's highest point and then started just losing down that momentum. But margins, good improvement in terms of margins, 600 basis point expansion in terms of margins on a year-on-year basis. Even on an absolute basis, the EBITDA came in and saw a good improvement of 29.1%. Profits saw a growth of almost 40%. So yes, all in all, in terms of the operational front, good set of numbers that came in from the company. That's how we saw a bit of a spike up coming in, but then gave out this momentum and almost flattish now. 0.6% of uptick is what it's holding on to.
Alright, let's talk about technicals once more. Ruchit, you've picked out HPCL on the charts for us. If I see the last 6 months, absolutely flat, not much has happened in this stock. So tell us, now are you penciling in any upward momentum? A good time to buy the stock now?
So I think the stock has gone through a decent time-wise corrective phase. In the month of February 2024, the stock was trading around this 370, 380 kind of range where the highs were made. Then it went through some consolidation or correction phase where it formed a support base around the 300 mark, but again it's back towards those levels. So if you look at the broader time frame charts, a bit longer term charts, then this entire consolidation since the month of February just seems to be a time-wise correction within an uptrend. And I think these are good levels where the risk-reward ratio is favorable. If the stock resumes its high degree uptrend from here on, then we could see limited downside from current levels and the upside could be much larger. So at current levels, if one is looking from a bit positional perspective, then I think HPCL seems a good buy. One can keep a stop loss below rupees 347, which is a positional support. And if the support remains untapped, then I think the stock could deliver good returns.
Let's move on to the next stock. Stock number 6 is Stanley Lifestyles is what we'll talk about. And Jinay, this is also in focus on the back of its numbers?
Well, yes, it's focused on the back of numbers. If you look at revenues, it grew about 5% coming in at 101 crores, whereas the net profit jumped about 9% coming in at 4 crores. Also, if you look at the operating performance, we saw a big improvement in EBITDA, up about 26% coming in at 20 crores versus 16 crores. Also, we saw a good 300 basis points margins improvement at 20% this quarter versus 16.7% last quarter, same period. Also, the management has said that the demand in the premium and luxury furniture market remains robust and they are on course to open about 11 stores in FY 2025, and they will be also evaluating further pipeline of new stores openings. And they've also highlighted some of the key risks which could lead to a weaker Q2, which mainly includes inventory buildups and delay in portfolio by the developers. Also, there has been fluctuations in raw material prices which could lead to a import risk for the company. If you look at the stock right now, it's trading with a loss of about 0.9%.
Okay, that's the reason Stanley Lifestyles is in focus today. But Ruchit, you've picked out ITC on the charts, and last 6 months, 20-25% uptick coming in. So which direction are you expecting the stock to head in now? What's your call here?
It has been in some consolidation since last 1 month, but one notable thing is the 40 days exponential moving average, which is usually seen as a short to medium term average support or resistance. So in this entire consolidation, the stock has not breached that 40-day EMA. So till this remains intact, I think the overall trend still remains on the positive side. One level that I would ask the traders to watch out for is the 502-505 range. So it's quite close to that level. If the stock manages to surpass 505 mark, then I think the stock has potential to mark new record highs as well. So in case if the stock goes above 505, then one can look for fresh buying over there.
Let's move on, and this is an exclusive story that we have. We told you first, and now it's confirmed that private equity player Warburg Pincus has picked up a majority stake in leading furniture fitting player EPCO. And let's go across to Anurag Joshi, who broke the story first to us. Anurag, what's the latest update on this?
Private equity firm Warburg Pincus is buying a majority equity holding in EPCO, which is a furniture fittings and architectural hardware maker. Warburg Pincus had been in discussions with the EPCO promoters in the recent past for the proposed acquisition, and on June 12, ET Now had reported that Warburg Pincus and multiples private equity were competing to acquire a controlling equity stake in the company, and the talks with the promoters were at an advanced stage. EPCO's promoters, the Nagpal family, will keep a significant minority shareholding in the company after Warburg Pincus acquires the company, and will be actively involved in the future growth of EPCO's business. Warburg said in a statement, EPCO started in 1963 as a tool room, and one of the key businesses for the company in the initial years was to supply cartridge links to ordnance factories. The other contender that was also looking to buy us controlling equity stake in EPCO was Kedara Capital, which had explored a deal in the initial stages of the transaction.
Alright, well, that's an 18-hour exclusive confirmed. Thanks, Anurag, for giving us all of those details. But on that note, we'll slip into a very short break and keep it going with all the big buzzes in today's trade when we return, so you stay tuned.
If you like this video, then like, share and subscribe to ET Now.